Good afternoon, traders. It's Bill Baruch with Blue Line Futures. It's your daily midday market minute. We have a big move in crude, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. And if you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yeah, crude oil lifted off last night after OPEC Plus decided to cut production as a surprise over the weekend. But first, let's touch on the stock market. Now, we've seen the Dow be pretty much positive through all morning long, the early hours after the European Open, while the NASDAQ has been down, as much as 1%, a little over 1% today. And we're seeing everything really kind of battle back here at the start of this final hour. But obviously, the question is, does this move in energy, this move in crude oil, if it's sustained, it's going to drive inflation higher, which would then keep the Fed tightening policy longer than the markets have priced in at this moment. And that's not good for tech. But, the Dow has tailwinds here from the energy space as well, and some of the more cyclical moving names. So overall, it's a nice mixed day. And I'm not surprised. Forget about the energy for a second. I'm not surprised to see the NASDAQ come in just a little bit. Now, we took that more bullish bias all last week, expecting that window dressing, advisors and managers buying those big tech names that they may not have had. Remember, coming into the year, everybody was negative on tech. So adding some of that tech at the end of the quarter, so it shows up in those statements. That's probably what a lot of that buying was, especially in the final hour and a half, 2 hours. Saw the NASDAQ go back and set a new swing high on the day, 13,300. So it's not surprising to see some of that digested here by the market. Now, the S&P, the big battleground, 4137. We were above that. Then we came off below it here pretty quickly after the opening bell, and really actually didn't quite get to support 4119, 4121. Traded, I think, the lowest 4126, and just sort of been battling and grinding back up here. We're now decisively out above 4137 here. Again, start of the final hour. Can we close above there today? That would be good. I got some more resistance levels all highlighted on the Morning Express. But as for the NASDAQ, the low on the day, 13,154. That is exactly the opening bell within the first 30 minutes, the opening bell high on Friday, 13,154. So I think we got a nice little floor potentially there. We're not far from it. And then we have a lot of support down at 13,000. All the levels are highlighted in the Morning Express, but it'll certainly bring an interesting day tomorrow. Do we have some strength that, reinvigorated from how last week finished, or do we continue to have some headwinds here? Is there new developments? And those developments really coming from crude oil. So back here, seeing crude trade above 80, got to above 81. At the end of the day, it's $82.5 to $83. That's the level that crude oil has to close out above. Remember, in quarter four, it could not get out above there. That's the ceiling. And, until it does, it is susceptible to potentially a little bit of a fallback here and settle in a little. Now, we have some support levels, some big support levels highlighted on the Morning Express. Of course, Friday's settlement is going to be rare major four-star support. We get down below there. The floor is doesn't exist anymore. But that range area is the floor. We have several support levels before that. Check it out. It's on the Morning Express. I think this really could, if we do get above 82, 83, starts to be the new bull leg. And I think as we head into this seasonally bullish time of year, heading from the end of March into Memorial Weekend, where energy, specifically gasoline and crude oil, can really perform ahead of driving season. But on top of that, I think we can get a really good China impulse, China growth impulse. Everybody's talking about reopening at the start of the year. It takes some time. I mean, it takes for the public as well in China to start coming out and then reestablishing themselves. I mean, from those lockdowns, those draconian lockdowns that they had for basically 3 years. So I do think we'll see a Chinese impulse, growth impulse here later this year. That's going to be a tailwind to crude as well as copper and some of the other metals. That's a good segue here. Finish up talking about gold and silver. Now, you got June gold battling at 2,000 once again. We have some resistance levels above. But last night, you had a little bit of a washout. I thought maybe that washout could have something to do. Maybe it's the start of the quarter, but maybe it's a little bit of fear that the Fed might have to move faster than expected. Remember, bonds were down last night. They're positive up about a point here today after ISM manufacturing data was much poorer than expected, contracting more than expected. That helped gold, but gold was already well off the lows overnight. Just staying at rejected support, staying within that pennant. It really needs to get out above 2010 in the June contract and then really kind of push a breakout. But silver has been making a little bit higher highs each day, grinding higher. I've highlighted some floors of support that we will see gold and silver remain constructive. So check them out in the Morning Express or give our trade desk a call. We're always here to help. Give us a shout, 312-278-0500. It's a big week ahead. A lot of data, finishing with non-farm payroll. We're here for you. Give us a shout. Remember, though, futures trading involves substantial risk of loss, and it's not suitable for all investors.